Hey, good morning, everybody, and welcome to another daily market report brought to you by Mike Bjork. Today is Tuesday, April 5th. I have to try to get used to saying April again. And take a look at the economic news. We got a couple, like I said, the important news will be later to this morning by 11 o'clock Pacific Coast time. The Fed minutes will be released. And then we also had ISM services. It had a little bit of a drop here at 57.3%. And then technicals, all the markets are up right now. The stock market from Dow to the S&P to the Nasdaq are all up a little bit right now. Bernanke had a little speech last night and basically was stating that, right now, it touched on the inflationary numbers that right now the core is at containable levels that should be at where it should be, and not to be concerned about it. It's sustainable. But obviously the headline right now, it's temporary, where we're seeing the headline where the gas prices, the food prices, everything else is kind of going up right now, but that's more temporary, as he was kind of stating. Also, that's the drag on the economy is the increase in foreclosures. He's hoping it will taper off by next year. So the economy is not where it like it to be, based on a lot of the foreclosures that are happening right now. So Portugal is also downgraded again, and then also trying to raise this to slow their economy down and raise their interest rates again. So those are all kind of trends. China's raising their interest rates. That hasn't, in the past, it hasn't had any bearing on our bond market. Sometimes when you see people raising their bonds, maybe investors may flock where they're buying their bonds versus maybe U.S. bonds, but that hasn't been the case. So we've been kind of fortunate with that. So let's take a look here at the bond market here. We're actually having pretty much tanking down. We pretty much almost, my slide didn't come in too well yesterday, my apologies. For some reason it didn't reflect Friday's, and it looked like this was Friday's numbers, but we pretty much almost closed the gap right here that we had that opening gap here. We started up, now we're kind of been dropping quite a bit. Now I think we might test the lower levels here, but I do think it'll pull up. The news isn't strong enough for have this type of a drop here. That should be in place. So right now mortgage rates are worse. Hopefully we'll see a little later today some improvements with them, but as of right now, more interest rates are higher than yesterday's numbers. All right, folks, you guys have a wonderful day, and talk to you tomorrow.